Hi guys, Nate here from NK & Co. Look, wanted to share a little bit of tax tips with you and talk to you about the environment of buying a vehicle. It's probably one of the most common questions that I get asked is, I want to buy a car, what's the best way to do it? Well, look, I think the most important thing to establish straight out is buying something that you don't need for tax planning purposes is always a crazy idea, okay? Especially when it's a vehicle. You've got to keep in mind that the value of vehicles depreciates really, really quickly, and there's not really ever an environment where it's a good investment to buy a vehicle. There are some environments, but generally speaking, it's not. So keep in mind from a tax planning perspective, buying a vehicle, not necessarily always the best idea. However, if the need arises where you need to buy a vehicle, you've got a couple of options to do it. The most common at the moment is a chattel mortgage or a car lease, or leasing the actual car. I'll give you a quick insight to the differences between two. The chattel mortgage means that you actually get ownership of that vehicle, so like legal ownership of the vehicle straight away, and then you have a financing agreement attached to it. Okay, so you own the vehicle, but you have to pay it off, a bit like a credit card. The other environment is leasing. Now, when you're leasing a car, the difference here is you don't actually own it, you're literally just leasing it and you're borrowing it. So from a tax perspective, how does this impact you? Well, quite simply, when you buy an asset, so let's say we go the chattel mortgage route and we buy the vehicle on that mortgage, we own it straight away. And because we own that asset, depreciation rules apply. So what this means is we need to depreciate the asset over the lifespan of that asset. Sorry about that. So what that means is quite simply that you're not going to be able to claim it all straight away. So from a tax planning perspective, depending on when in the financial year you've bought it, will depend on whether you're going to get a huge sort of deduction to your tax return or whether it's going to be the next year you've got to wait. But the point simply being that you would claim it over its lifespan, right? The other option where you're leasing it, you generally pay a little bit more, but the entire repayment would be deductible for each payment that you make, all right? So obviously assuming that your car was 100% for work. If it was only 80% for work, 80% of that payment would be deductible. So the difference between the two, chattel mortgage, you have to depreciate the vehicle. You would claim interest straight away, but you'd have to depreciate the vehicle. The lease, you would claim the lease repayment straight away, but you generally end up paying a little bit more in each of those payments. Which is the better one? Look, it totally depends on your circumstances, and do speak to your advisor and your accountant about the specifics. But it's important to understand the differences between those environments. When you're buying a car, chattel mortgage, you're going to own it straight away but pay it off. So if you're registered for GST, there could be some benefits there in that GST tax credit. But if you lease it, you're going to then pay each period you make a repayment, you'll claim that full repayment, okay? And you don't need to depreciate the car, then you're claiming the repayments. So guys, little bit of information there for you around buying a car. If you've got any further questions about this, please leave some comments and I'll try and get back to all of you as quickly as I possibly can. But that's it for me today. Thank you very much for taking the time to watch this quick video on buying a car. If there's anything else you'd like to know, please shout out and let us know. If not, hit the like button and subscribe to the channel for updates on tax tips this season. Thanks very much for your time, guys, and have a great day. Bye.